And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is Tuesday, turnaround Tuesday for the markets. I don't know if we're going to get a turnaround, maybe to the downside or the upside. We're going to get into that real quick here and do something a little bit different today, where I'm going to go over all the time frames that I'm looking at right now, including the hourly, 4-hour, daily, 2-day, 3-day, weekly, monthly, and the quarterly closures or candles that we're taking a look at right now. So let's just lay the backdrop for kind of what is going on in the macro picture here. When we're looking at the macro picture, usually we're looking at the weekly time frame. I'm just going to get rid of some of these trend lines here. Excuse me. And we're looking at the macro picture. So what is the trend on a macro basis? We look at the weekly time frame to give us a general bias of price action over the next 3 to 6 months. And I will reiterate that as long as we are in a weekly downtrend, I'm expecting 3 to 6 months of sideways and down. And how do we know when the macro outlook has changed? Well, it's pretty simple here. We're going to get a higher high and a higher low. It would look something like this, right? Higher high coming from right here, higher high, and then a higher low. And that would be a trend reversal on the weekly time frame, which generally sets the bias and the trend for the next 3 to 6 months at a minimum. So that will be something to be looking out for. But until then, let the trend be your friend till the end of the trend. And yes, it is hard to remain bearishly biased, especially when Bitcoin puts in, you know, from the lows here, from the lows, a 39% rally on Bitcoin. And we've been saying it the whole time. Look, there are going to be bounces along the way down. And this one is pretty significant so far. So just starting it off here on the lower term time frames, I'm going to get down, started off with an hourly time frame. And you can see the hourly trend is down, and we are being governed by the green 55. And let's look for some divergences here. We do not have any bearish divergence coming back from this point. Let's see. So RSI is making lower highs as price is making lower highs. So no divergences there. Now, on the other side of that, from this high right here, we do have 2 drives, and we'd have to confirm that as a local low, which would, or excuse me, as a local high, which would give us a shot back down to the bottom side of the range. Now, what's on the other side of bearish divergence? Every single time there's going to be bullish divergence. So, or hidden bullish or bearish divergence. So in a downtrend, we're looking for classic bullish divergence where the price is making lower lows and the RSI is making higher lows. So do we have any divergence for the bulls here yet again to play out? And by taking out this low, I would say that ruined our chances on the hourly time frame. Could you call this a low? I would not. That is not a confirmed local low. So in order for us to get 3 drives of bullish divergence, the last local low is going to be right here. And we're going to see where this lines up with some of our other time frames here. So that's at 21,160, 21,120, which I believe was right in line with the target we had yesterday for kind of an overall downside move. But we're going to line that up with the higher term time frames in just a second. So typically what you want to see is 3 drives of bullish or bearish divergence to get you a move to the top side of the range or to the bottom side of the range. So pretty much on the hourly time frame, what do we see here? So additionally, what am I looking at here? So I see volatility is low. This is our volatility indicator. This is the momentum indicator. Stokes are crossed to the upside. And will that, let's see if there's any divergences between these points. So We are putting our first drive of bearish divergence coming back from this point right here and this point right here. So let's just mark these off just for kicks here. So we got 1, 2, 3, 4. So if we do confirm this as a local low and we cross down on the hourly time frame, excuse me, really if we want to do it based on closures, let's do it based on candlestick closures. So we want the body to close below this line right here, which, what do you know, that is right where hourly momentum will turn to the downside. So how would we confirm this as a local high? Well, I'd say any kind of a closure back below this low here, right here at 22,761. That's going to be good enough to do it for me. You'll see Stokes come down, volatility increase, and very, very likely the next move on the hourly time frame from this high to this low is going to come in right here at 22,320. So not a big move, right? In cryptocurrency land, a 1.4% move is actually a pretty nice move. If you're using leverage, I don't recommend you do that unless you have a trading plan, a successful trading plan that you've implemented and already back tested. So looking for a confirmation of a low. What do we see on the 30-minute? Stokes are crossed up, bouncing off the 618 right there. 15-minute, Stokes are crossed up, volatility is up, and we are heading back to the bullish control zone. So could we get a little bounce in the short term? Yes. However, as long as we are really lower than this guy right here, 23,870 on an hourly time frame, then I am looking for pressure to remain to the downside as NASDAQ pulling back slightly today. I think the JOLTS numbers were coming out today. I'm not sure exactly what the JOLTS numbers said yet. I'll have to get onto that, but it is a leading indicator for the Fed to know whether they're going to have to put the brakes on or put the pedal to the metal when it comes to those rate hikes coming in September. I do believe we're going to get a lot of hemming and hawing and volatility right now. The big news today and right now is Nancy Pelosi is going to China. Excuse me, she's going to Taiwan, supposedly, and China will take this as a threat to the One China Communist Party, whatever you want to call it. And in past prior market cycles, basically, you know, the last time a U.S. senator or, you know, high-ranking official went to Taiwan, the Chinese shot some nukes over there that just basically missed the shoreline and kind of did it as a flex against the United States. And then I believe our president sent over an entire fleet of our Air Force and basically, you know, laid the clamps down on them. So I think it's more or less just a thing they're running in the news right now. I don't think anything's going to come of it. And sadly, Nancy Pelosi is third in line to the presidency. So if Joe dies of COVID and then we see the vice president Kamala die of COVID, Nancy Pelosi would be our president. Scary thought. Scary, scary thought. What has America come to? Yeah, so we don't want to get into that talk right now. We're here to talk about Bitcoin and get into some of the higher term time frames. And these are crossing down right here, momentum crossing down on, and we'll cross back up above 23,000, which we got another 15 minutes on this closure. So could momentum cross back to the upside? Short term, I don't have a good idea of what's going on there. I'll be the first to admit here. But by breaking below this low on the 4-hour time frame, that does give me a little bit of bias there. as we wrecked our chance for bullish divergence coming back from that point. The next point, what do you know? It's right here at 21,136. So are we going to get any divergences playing out yet? No. So price has to, or RSI has to do something like this to get your three drives, right? We got to go down, down, and down. That could get us out of the bearish control zone. So 4-hour time frame, that could take some time. You know, we're talking about probably 2 or 3, you know, maybe 2 days, 3 days. No, maybe a day and a half, something like that. Every 4 hour, how many 4-hour closures are there in 24 hours? 4 times 6. So there are six little movements on this RSI every day. And yeah, so bottom line is, before we get shot back up, now, if we can get a 4-hour closure back above here, the breakdown level, you see these wicks right here. That essentially was your breakdown. If you want candle body closure right there. So if we can get a 4-hour closure back above 23,600, that'll look good for at least a try to these highs right here at 24.22. But as we have noted here, we got that bearish divergence coming back from this point right here, right? So on the 4-hour time frame, we're looking for clear stop and reverse points here, and we got plenty of them right here. I'm just seeing 3 right there, but let's go back to this one right here. No, that's not going to do it. So do we do something like this? So let's take a look at our fib retracement real quick on the 4-hour time frame on a bearish retracement. So we're coming in right to the 0.5, probably giving a small bounce. Could we bounce all the way up to the 236? Yes. If we put in another lower high right there, that would look good for the next leg down to possibly, 21,595. And just trying to put my thoughts together here on midstream. I didn't take any notes for today, so I'm going to get rid of some of these guys right here and then make a cleaner chart. So again, 3 drives gets you a shot to the bottom side of the range. And yes, indeed, this, I'd say that is a confirmed local high, but those are not higher highs in RSI, right? Excuse me, those are lower highs, yeah. So hidden bearish divergence, again, is in a downtrend. When price makes lower highs, RSI makes higher highs. Regular bearish divergence is when price makes higher highs and RSI makes lower highs. So that is what we're looking at right now. Regular bearish divergence. We are in an uptrend on the 4-hour time frame, not on the weekly or the, actually I think the daily just flipped around as well. But you can see here 1, 2, 3 higher highs than this high, and it got us a shot down at the bottom side of the range. Not quite, almost to the bottom side. Let's see how far did it go down, right? So it came right to the 618, right? So now these are more clear stop and reverse points. So we got 1, 2 drives. That typically gives you a shot to the yellow 21. We're already below there. So bear with me just a second here. The 4-hour looks like it wants to come down, yeah, to here. If we break 21,889, even I'd say 22,540. If we break this purple 200 with a closing basis, I am going to look for a move to this 21,200. Okay, what else does that line up with if we just go from this low to high? That's close enough is close enough right there. And I guess we're kind of looking for this trend line to hold. If Bitcoin wants to save itself from, a massive downwards move. If this trend line does break here anywhere around 20,500, I'm looking for the next shot down at the bottom side of the range at 18,000. And I would probably wait for a daily closure below there. But I would say if you want to be a little more aggressive, you could look at a 4-hour. Again, this isn't financial advice. I'm not a financial advisor. We're talking about magic internet money for fun on the internet, just for your entertainment only. And hopefully, at some point you download our mobile app and start, we do have a mobile app, Bitcoin Advisors. But you go to TradingView and you set up your account so you can start tracking your favorite assets alongside with us. All right, so we went into the 4-hour time frame. Stokes are down as long as we're below 22,821. And do we see any bullish divergence here? No, these are higher lows coming all the way back from here. So what's on the other side? Again, we have pretty much 1, 2, 3, 4. And I would call, a move down to 21,200 based off of this. Where does it get invalidated? How do we know we're wrong? And that would simply be with a closure back above 23,819. That would be the pivot for the day. So I'm going to mark that off and see if it lines up with any of our higher term time frames. So we got two major pivots, call it 21,200 and 23,800 on the 4-hour time frame. Okay, let's take a look at the 12-hour. So 12-hour is putting in some of that bearish divergence, probably coming back from this point right here. Again, that is the June 7th high right here. And what do you know? Right here from this point, even from this point right here, let's take a look. Yes, 1, 2, 3 drives of bearish divergence. And that should give us a shot to the bottom side of the range. And you can draw trend lines on the RSI. So where do we have a trend line? I'd say coming in like this. I'd say it already broke. It already broke, and that was the retest. Maybe this is a better trend line. Yeah. That's lining up a little bit nicer right there. So if we do break this trend line on the RSI and get kicked back in the bearish control zone, that would be a good indicator on the 12-hour time frame. The higher the time frame, the bigger the move, and that very likely would line up with a break of this trend line, giving us that shot down to 18,200, lining up with these wicks back there. Remember, wicks like to get filled, and I would expect a bounce off of this region at a minimum. Again, not financial advice. I'm not a financial advisor, but bearish divergence is one of the tried and true best indicators, if you ask me. And in the context of a downtrend, prices making lower highs, RSI is making higher highs. That is bearish divergence. And by the way, you can get these trading indicators for free. Follow the tutorial in the link in our description, and you can get an RSI, the Stokes, and the BBWP for absolutely nothing. And then you can start to begin to follow along with us. All right. Next on the board, we said daily time frame. Yesterday, and we called this out actually, I think, whatever day this was, July 31st, the last day of the month. And we did say, hey, look, not only was the bare moon going to show up, but we had 1, 2, 3, coming back from this point right here. We had, 1, 2, 3 drives of bearish divergence, hidden bearish divergence. Again, hidden bearish divergence is the context of a downtrend when price is making lower highs. Downtrend is lower lows and lower highs. Okay. And on the daily time frame, could we say we're still in a downtrend? Yes. Until we take out this high, this is not This is just sideways action. Could you possibly say, oh, we're making higher highs and higher lows? Yeah, you could. But the weekly downtrend is still in place. So I'm a little bit more to say, hey, we're still in a downtrend on the daily time frame until we get back above 31.5 and make a higher high from that high, right? Here's the ultimate low. Here's the high. We got to take this sucker out right here at 31,351. And that'll be our first warning sign that, hey, maybe those bulls are right. And Bitcoin's just going to lift off and the macro low is in. However, I don't think that's the case. And what else I want to bring up here? So with Stokes about to cross down. Oh, no, they did officially cross down yesterday. So you see how these guys crossed right here? That's a cross down. And we'll cross back up above 24,000. So if we can get back above 24,000, this major pivot right here, 23,822, that's going to be our first indicator that, hey, this party is over to the downside. However, I don't think that's the case. I think we still got a little bit lower to go. Let's take a look at the 2-day time frame. The 2-day also confirming some bearish divergence. Again, when you get all these lining up, kind of doing the same thing, typically a sign. So any closure today below this guy right here at 23,160, call it 23,000, is going to give me the bias for a downside move. And remember, in a downtrend, the moves to the downside are going to be greater than the moves to the upside. So, do we have any bullish divergence on the other side? No. Not coming from this point. Yes, we do, coming back from this point right here. And so, if we can confirm a local low here at some point, and how do we do that? Let's just make this a little easier. Oops. I think this video is getting a little bit long here. 22 minutes in, we haven't even got to the weekly time frame. So, bullish divergence again. Hidden bullish divergence in an uptrend. Price is making higher lows. RSI is making lower lows. Classic bullish divergence is price making lower lows. RSI is making higher lows. So here I'm going to point it out again. Hopefully this is helpful for some people out there. It's helpful for me. So forget about you guys. This is for me so I can see what's going on in the macro picture here. 2-day time frame is a rather powerful time frame, and we do have this green 55 approaching. So again, price is making lower lows. How many lower lows do we got here? 1, 2, 3, 4. RSI is making higher lows. So from this point right here, again, we want to see 3 drives. So here's 1, here's 2. And all we got to do is see the RSI hold and not basically break back down below this level right here. And this will remain valid. Really, this guy right here. So, as long as RSI does not come back down below this guy on a 2-day time frame, then that would be the low right here, maybe right here. We will have 3 drives of hidden bullish divergence. So maybe price goes like this, right? If we break this guy, get damaged, come back down to lows, that's, I probably think, a little bit more likely of a case here. So we come back down maybe around 19,240. Get some sideways action, boom. Put in a low right here. We just got to put on a low. And then that gives us a shot back to the top side of the range, somewhere right there. That could be the case. Yep. So formulating my own plans as we're looking at this guy, because volatility. However, if we see volatility tick up and Stokes stay down below 23,000 today at 7 hours and 58 minutes, I mean, a lot can happen in 7, 8. And the stock market's just being volatile as ever. And we did have this measure move called out on the stock market yesterday or the day before. And we did say, hey, look, likely the measure move on this ascending triangle to get hit after we got the perfect kind of retest. And where did that line up with? So I hate to call this out and say, hey, look, ascending triangles work, but apparently they do. And so I would expect some selling pressure somewhere around this purple 200, something like that. And if we don't get kicked out of the bullish control zone here and Stokes stay up, volatility ticks up. Right now it's ticking down. So what else do we want to look at is the dollar. The dollar is bouncing here. Not good for stocks, not good for Bitcoin. If the dollar does put in a major bounce off this green 55, which it does like to do, as you can see going back here. And we will have at least 2 drives, 3 drives of, yep. So prices making higher lows, RSI is making lower lows. And I would say any kind of a daily closure on the dollar above 106.28 will give us a shot back to the top side of the range coming in. Here at 108 at a minimum, call it 108, somewhere around here. That would not look good for Bitcoin and the rest of the market. All right. Getting back to Bitcoin, higher term time frames on the weekly time frame. Let's check out CMEs. CMEs. What did the week close last week? Yeah, so we got stifled at that purple 200. Actually, we were talking about it. You know, if we got a closure above there, likely that was going to be a bullish sign, but we did not take out that high. And, you know, it's just sloppy on CME. Stokes are crossed up, and that very easily could get us a bounce up to this region. Again, these things don't happen overnight. You know, the weekly time frame is going to take a lot longer to play out. Sometimes a week, sometimes 2 weeks for those moves to actually happen. And it's 9 a.m., so it is about time for me to move on to my next meeting here. So I think spot price has just been a little bit easier to read lately. And very similar chart here, except for we did not get above the purple 200. The weekly time frame volatility is, so it looks like this move played out, right? We talked about it. Stokes crossed down, volatility expanding. The average move, I think, is, you know, somewhere around 50% to the downside. So Stokes crossed down right here. Volatility expanded right here. And that was 54% to the downside. Additionally, the mean reversion play when volatility now is contracting and momentum's back to the upside. I think the average bounce play is similar, somewhere around 50%. I'd have to go back and back test it myself. I don't have time to do that today in this stream, but it's not out of the cards for Bitcoin to reach up towards that wick right here at 26.6 and even to the yellow 21, which that will be coming down each and every week going by. So that is the area I am looking to essentially put my shorts on. Yes, I'm going to go get my golf shorts. I'm going to go get my big boy shorts and, you know, see if I can't stick with my guns, with my overall bias that the macro low is not in. I don't think that's the case yet. And why is that? Well, typically, a couple of reasons. Let's look at why my opinion. And we did talk about this on the monthly. We could get a backfill easily down to that green 55. Honestly, I don't know why this green 55. Well, it's because price history is shorter and longer on different exchanges. So This one, Coinbase, has price history going all the way back to December 2014. This one has price action going all the way back to this Bitstamp. These are probably the two more accurate ones here. But volatility is still increasing as momentum will remain to the downside as long as we are closing below 38,343. So when do we expect a macro low to be put in? Well, I definitely want to see the Stokes begin to turn up. I guess that would kind of cement in that bearish biasness. Anyways, that was the monthly. The quarterly, another sign, you know, kind of a bearish close. Here's the 3-month time frame like this, crossing to the downside. And do we have any bullish divergence? Well, if we do confirm that as a local low, yes, we will have 1-2 drives, and that could give us a shot all the way to the top side of the range. How would we confirm that? As a local low, we'd have to close somewhere like this, and then close the following month really above this high right here, if that is the high for the month. So that'll be something to be keeping our eyes out. The quarterlies, guess what? Those come every 3 months. So when I say the weekly time frame kind of governs the next 3 to 6 months of price action, that's exactly what I mean. We'll be looking for that weekly reversal on our channel, because when the weekly reversal happens, I will tell you there are going to be some magnificent plays in this cryptocurrency market. I look forward to being there with you. Thank you guys so much for watching and subscribing to the channel. Hope you have a wonderful, blessed, and highly favored day. Take care.